The average S&P 500 has 500 stocks. The NASDAQ 100 has another 100. Add mid-caps and small caps, and you are looking at thousands of potential setups at any given time. Nobody can analyze all of them manually. The traders who try end up paralyzed by too many charts, too many signals, and no clear priority. The traders who succeed have a system, a defined set of criteria that automatically narrows the universe to a manageable list of high probability candidates. That system is a technical watch list process, not a list of stocks you read about in a newsletter, not stocks your colleague mentioned in a meeting. A rules-based, criteria-driven filter that produces a short, high-quality list of setups that meet your specific standards. AI does not replace the judgment required to build this system, but once you define your criteria, AI can apply them to hundreds of stocks in minutes, a task that would take a human analyst an entire day. Let me show you how. A good technical watch list is built in 3 layers, each one narrowing the universe further. Layer 1 is the macro filter. This removes stocks that are fighting major headwinds regardless of their individual chart. A stock in a sector that is in long-term relative underperformance is swimming against the current. Start by filtering to stocks in the top 2 quartile sectors as identified in the sector rotation analysis from last episode. Layer 2 is the technical setup filter. Within the stocks passing the macro filter, you are looking for specific technical conditions, trend alignment, proximity to a key level, a pattern that is either forming or just completing. This is where chart analysis from earlier episodes comes into play. You need a pattern matching screen. Layer 3 is the risk-reward filter. Of the stocks passing the first 2 filters, only keep the ones where a setup with a clean risk-reward ratio of at least 2-to-1 exists. The entry is defined. The stop is below a specific technical level, and the target has a technical basis. Most traders skip layers 1 and 3 entirely. They screen for patterns without macro context and without defining the trade structure. The result is a long list of stocks they do not know how to prioritize. Prompt 1 applies the macro filter to build a curated starting universe. Use this prompt. I want to build a technical watch list starting from a broad universe of stocks. Apply the following macro filters and give me a list of stocks that pass all criteria. First, the stock must be in one of these sectors. Insert your top 2 or 3 sectors from the sector rotation analysis. Second, the stock must have a minimum average daily trading volume of at least 500,000 shares or $1 million in average daily dollar volume. Third, the stock must be currently trading above its 200-day SMA, confirming it is in a long-term uptrend. Fourth, the stock must be within 15% of its 52-week high, indicating it has not deteriorated significantly. Using the components of the relevant sector, ETFs, identify all stocks that pass all 4 of these criteria and provide the list. These 4 filters alone will cut a 500 stock universe to 50 to 80 names. You have eliminated the weakest sectors, the illiquid stocks, the broken long-term trends, and the severely damaged charts. What remains is a curated universe of technically healthy stocks in the right market environment. The universe filter gives you a starting pool. Here is how to use it. Size matters. If the filtered list is still over 100 stocks, tighten one of the criteria. Move the 52-week high proximity from 15 to 10% or raise the volume threshold. The goal is a pool of 40 to 80 stocks, small enough to analyze properly, large enough that you will not miss major setups. Sector concentration. If 70% of your filtered universe is concentrated in one sector, the sector rotation signal is very strong. That is useful information. You are essentially being told that the best opportunities are concentrated in one area. Do not diversify artificially, just to spread the risk. Starting with quality, every stock on this list is in an uptrend, in a leading sector, liquid and close to highs. You have not identified a trade yet. You have identified a pool of candidates worth further examination. The next prompt does the pattern recognition. Prompt 2 applies the technical setup filter to the curated universe. This is the most computationally intensive step. Pattern recognition across 40 to 80 charts simultaneously. AI handles this efficiently if you provide the right framework. Use this prompt. From the following list of stocks, paste your filtered universe. I want to identify the ones showing specific technical setups. For each stock, assess whether it currently shows any of the following conditions: a pullback to the 20-period EMA or 50-period SMA within an established uptrend, a consolidation of less than 10% range over the past 3 to 5 weeks after a prior uptrend move, a breakout from a base above a prior resistance level with above average volume in the past 10 trading days, or an RSI reset to between 40 and 55 after being above 60, indicating a healthy momentum reset in an uptrend. For each stock where one or more conditions are met, specify which condition applies and rate the setup quality from 1 to 3 based on how clearly the condition is met. You are now applying a disciplined pattern recognition screen to a pre-filtered list of quality stocks. The output is a ranked list of technical setups, not a random collection of charts. AI can process this screen in minutes. The pattern screen produces your candidate list. Here's what to prioritize. Multiple conditions met. A stock showing both a pullback to the 50-day SMA and an RSI reset to 50 simultaneously is exhibiting 2 independent conditions pointing to a potential entry. That overlap is better than one condition alone. Set up quality ratings. Prompt for AI to rate 1, 2, or 3. Focus first on the 3 rated setups, the ones where the pattern is clean, well-defined, and unambiguous. The 1 rated setups are borderline and should only be looked at if the higher quality list is thin. Recency of the setup. A pullback to the 50-day that happened yesterday is a live setup. One that happened 3 weeks ago and price has since moved 8% may no longer be at an entry point. Ask AI to flag how recent each setup is and whether the technical condition is still active. Prompt 3 is the final filter, defining the trade for each candidate and retaining only those with a minimum 2-to-1 reward to risk ratio. For each high-quality candidate from prompt 2, use this prompt. For the stock name, which is showing the setup from prompt 2, define the complete trade structure. Specify the entry price. At what price would you initiate the position based on the technical setup, the stop loss level, below which specific technical level would the setup be invalidated, the initial price target based on the next significant resistance level or Fibonacci extension, the reward to risk ratio, dividing the distance from entry to target by the distance from entry to stop, and any conditions that would invalidate the setup before entry, such as a break below a key level or a deterioration in sector conditions. Only present setups where the reward to risk ratio is at or above 2.0. This step eliminates the setups that look interesting visually, but do not offer enough upside to justify the risk. A chart pattern with a 1.2-to-1 reward to risk ratio is not worth trading even if the probability of success is high. The math is against you over time. The 2-to-1 threshold is not arbitrary. It is the minimum where positive expected value can accumulate even with a 50% win rate. The trade structure filter leaves you with a final watch list. Here is what a finished watch list entry looks like. A complete trade card. For each stock on your final list, you should have the pattern, the entry trigger, the stop loss level with technical justification, the target with technical justification, and the reward to risk ratio. If any of those 5 elements is missing or vague, the setup is not ready. Do not add it to the list. Priority ranking. Sort your final list by reward to risk ratio, with the highest ratio setups at the top. Among setups with similar ratios, rank by setup quality. The top 3 to 5 on the list are your highest priority candidates for the week. Maximum list size. A watch list longer than 10 stocks is not a watch list. It is a database. You cannot monitor 10 setups closely enough to execute well. Aim for 5 to 7 high conviction names at any given time. Add new ones as old ones resolve. Either the trade triggers and you enter, or the setup invalidates and you remove it. The bonus move is the process for keeping the list current, because a watch list that is not actively maintained is just a list of stocks you once found interesting. Use this prompt at the beginning of each week. Review the following watch list from last week. Paste the list with entry levels, stop levels, and targets. For each stock, tell me, has the entry trigger been hit? If yes, is the trade currently profitable or has the stop been triggered? Has the technical setup changed, either improving, deteriorating, or invalidated? Are there any setups where the entry level needs to be adjusted due to price movement since last week? Remove any setups that are now invalidated. Rank the remaining setups by current urgency, which are closest to triggering an entry this week. The weekly review takes 10 minutes with this prompt. You end up with a current prioritized list every Monday. Over time, you will also build a track record, which setups triggered, how they performed, where they failed. That record is the feedback loop that improves your screening criteria over time. A technical watch list is not a collection of interesting stocks. It is a rules-based system that produces a short, high-conviction, trade-ready list of setups that meet your criteria and nothing else. Prompt 1. Building the universe. Apply macro filters to narrow from hundreds to 40 to 80 stocks. Right sector, sufficient liquidity, above the 200-day, near 52-week highs. Prompt 2. Pattern screening. Run pattern recognition across the filtered universe to identify the specific technical setups that match your criteria. Pullbacks, consolidations, breakouts, momentum resets. Prompt 3. Trade structure. Build the complete entry, stop, and target for each candidate. Keep only the setups with a reward to risk ratio of at least 2 to 1. Bonus. Weekly maintenance. Review and update the list every Monday. Adjust for price movement, remove invalidated setups, reprioritize by urgency. A system that runs consistently beats a brilliant insight that is applied randomly. Build the system. Run it every week. Let the compounding do the work. Next episode, the complete technical analysis workflow. Everything from this series assembled into a single repeatable process. See you Monday.